Welcome to the Money Tips No One Told You podcast. I'm Heather with First Pioneers Federal Credit Union, and I'll be your host. At First Pioneers, we're dedicated to caring for our members' financial needs with heart, and that means providing more than just financial services. It's about empowering you to take control of your financial destiny through knowledge and understanding. This podcast is all about guiding our listeners toward a brighter financial future. So get ready to embark on a journey towards financial well-being, because at First Pioneers, we believe that when our members are financially successful, we all succeed. Stay tuned for a wealth of knowledge and inspiration. You guys, can you believe that we have now officially entered the second half of the year? I just can't believe that. To me, time has just flown this year. I can't believe we're already at that point. You know, summer over, the kids are back in school, or if they're not, they're probably only, a week or so away from it. So yeah, second half of the year, here we go. We're going to finish it out. And you know what that means, right? It means it's an excellent time for a mid-year financial check-in. Now, why is that so helpful, you may ask? Well, it helps you sort of assess your financial health, track your progress towards your goals, and it shows you where maybe you need to make some adjustments so that you stay on course for the year. And today I have 6 tips to help guide you through an effective mid-year financial check-in. The first one is review your financial goals that you set at the beginning of the year. Now, of course, maybe your goal at the beginning was to save for a big purchase, maybe a big vacation or something like that. Or maybe you were looking to pay off some debt. Maybe it was even to increase your retirement savings. That's always a good thing. And so now's the time to take a look at those goals and evaluate where you are. Are you on track? Maybe you're ahead. That would be great, huh? Or maybe you've fallen a little behind. Maybe some things came up and, things just changed. Perhaps you've reached those goals. And so now you're changing those goals. Something in your life changed. So it was time to shift those goals. And really, no matter what your situation is, the important thing is to update those goals, because you now want those to reflect whatever those new priorities or circumstances are. And what that's going to do, it's going to help you remain focused or perhaps refocused for the rest of the year. Second is examine your budget. And as I'm thinking about this, I feel like I may bring up a budget in just about every episode. But they're really important. So that's why we talk about it a lot. So take a minute, examine your budget. You want to look at your actual spending versus what you planned in your budget. And of course, then you want to make note of any areas where you overspent or perhaps you underspent. Because when you understand those patterns, that can help you start to make any adjustments that you might need to make in order to stay on track. And of course, don't forget, y'all, there are many, many budgeting tools and apps out there that you can use, and it may help you simplify the process. And, a lot of them really will provide you with real-time insights into your spending and your spending habits. So check those out. Might make it a little easier. Find one that works for you and see if it can help you with your budget. And number 3, you want to evaluate your savings accounts. So you want to take a look at your emergency fund, your retirement accounts, and really any savings accounts that you have, any of those goals that you have. So you're looking at, have you contributed as you planned to? Have you been consistent in those contributions? And also, take a look at your investments. And this may simply be your retirement accounts, or you may have other investments as well. The key here is to take a look and, review how are they performing. I mean, we all know interest rates have changed a lot in the past couple years. We know that. They're somewhat stable right now, I think. At least the Fed has not made a change. I know we're anticipating that happening. But how long has it been since you've actually looked at these accounts? Have you looked since all these interest rates changed? And how are those accounts performing? How do the markets look? Are there any things that you need to move or adjust? Hopefully you have a financial planner that's helping you with that. And you may want to just look at those things again, just have a conversation with them. And also look at, have you saved as much as you plan to? If you didn't, maybe make note of the reasons why. And maybe explore some ways you might be able to increase your savings. Maybe there's some expense you can cut, something a little extra that you're not really using, or, ways that you can increase your income that might help you get back on track. And of course, if you saved more than you planned, that's really great. Maybe you can look at your goals, and maybe there's some new things you can add to that. We talked about that earlier about goals, but maybe it's time really to look at those and see what can you do with some of that savings. Maybe if you've got some additional that you didn't expect to have, or it's over and above that goal you had set, maybe you put it in more long-term investments like a CD or something like that. So take a look and see how you might adjust your savings. Of course, at number 4, you're going to want to assess your outstanding debt. And we're recommending that you basically take a look at all of your outstanding debts. So that's going to be credit cards, any loans, your mortgage. So you want to take a look at your interest rates. Have any of those changed? Look at your minimum payments. Are you making those payments? Can you make some extra payments? And how would that help you? And of course, just assessing the outstanding balances and where you are. Because if any of that has changed, of course, it may change your goals. Maybe you're looking at it and it's time to create a repayment plan. Or maybe you already have a repayment plan. And again, some of these things have changed. So maybe it's time to adjust that plan. I don't know if you guys remember, there was a previous episode where we talked a lot about paying down debt. And especially with credit cards, you would put your extra money towards the one with the highest interest rate and get it paid off. And then you take that extra money and put it towards the ones with the lower rates, and you kind of stair step those and do them one at a time until you pay them all off. You could do the same with the loan as well. So it's just something to consider. Maybe you want to revisit that episode and listen to those ideas. You can also consider exploring refinancing options. Sometimes there are terms that may be a little better and maybe could help you reach your goal a little easier. Maybe even save some money. That may or may not be an option, but it's something to think about as you take a look at those debts. Number 5 is review your retirement contributions and your other investments. Now, we touched on investments just a second ago, but have you looked at your investments? Are they still aligned with your current risk tolerance? Because, often your risk tolerance will change depending on your age. When you're younger, you could take a little more risk. When you're older, maybe not so much. So maybe take a look at that. If it's been a few years, maybe it's time to make some adjustments. Have your long-term goals changed? So take a look at those things, and then you want to look at their performance and see, are there any adjustments that you need to make? Are there any moves that you need to make in your portfolio? If you're allocating money, you want to look at those risk levels, like I said, because if you've gotten older, let's say it's been 10 years since you've looked at your 401k allocations. Well, you're now 10 years older. Are you at a place where your risk level needs to go down? Are you trying to optimize those returns because you're young? Optimize those returns because you're getting closer to retirement age. So just make sure that you kind of take a look at those. Whoever is advising you on your retirement account, maybe just have a call with them and just see where everything is and if there's anything that you want to change. For your retirement accounts, especially if it's 401k and your employer offers a match for contribution, I would really make sure that you're taking advantage of that, guys, because if you're not, you're kind of leaving money on the table. You really are. So check that out. Make sure you're getting that match. And if you can, maybe it's time to increase your contribution if that's possible. So take a look. I find these are ones that people often don't think about. Maybe as you're a little bit older and you're getting closer to retirement age, it's something that's a little more kind of on the forefront of your mind. But especially for younger people, it might not be something that they really think about a lot. So make sure that you include retirement and investments in the things that you're reviewing and evaluating. At number 6, you want to update your insurance coverage. And again, I think this is another one that a lot of people, they don't think about it that often, at least until they need it, and then you realize, oh yeah, I should have updated that. Maybe health care is probably one of the ones that you use more, maybe. So you may be more on top of that one. But you have several policies, most likely. This is going to include health, auto, home, and life. I feel like that's one a lot of people they either don't have, or they may not think to reevaluate it at times. So you want to look at these and really make sure, is your coverage adequate? Because remember, when you have those life changes like getting married, having children, buying a home, all those things are major life changes, and they often are going to require that you adjust your coverage on your insurance. And so I think I've mentioned this before on here, and of course, folks that are familiar with the credit union already know this, but we are located in South Louisiana, and we have officially entered hurricane season at this time. In fact, at the time of this episode, a hurricane has actually already hit the U.S. Let me give a quick sending of love to our friends over in the Houston area that are dealing with that, by the way. I hope things are getting better for you guys and that you're getting all the things that you need over there. We're certainly thinking about you here. So anyway, let me move on. One thing you don't want to do, though, is forget about your home insurance. I know I tend to do that. It's almost out of sight, out of mind, But is everything covered? Do you really know what your policy covers? I know here you'll have policies that they'll cover storm damage, from hail or whatnot. But they may actually have a separate deductible if it's a hurricane. I know we had to have a new roof on our home, and it was from hail damage and things from just thunderstorms that had come through. So we just had the one deductible. And of course, we've seen a lot of changes, especially here over the past few years with flood insurance. I mean, we have people that are actually having trouble getting a policy at all. The insurance companies just aren't writing them. So, if there was a flood situation, are you covered? So I feel like it's a really good idea, periodically, do it now. Check your policy. Make sure you know what's covered and, more importantly, what's not. Check what your deductibles are. If you have multiple, do your best to have those deductibles in a savings account, because if you've reached that point where you have the damage that you're needing to pay that deductible, most likely things are a little rough already, right? So the last thing you want to worry about is trying to come up with that money. So it's really a good idea to just take a look at those policies, see what they cover, see what they don't, see what those deductibles are. Are there ways you can save money? Maybe there's changes you could make that would actually reduce your premiums. You really never know. And I know, especially when we were young homeowners, you have a lot of people sort of putting pieces of paper in front of you and telling you to sign them. And sometimes you're not even sure what they are. And sometimes, especially with insurance and things like that, you have to have the insurance. So okay, sign here. Or you call your insurance company and they handle it. And did you really even take a look at the policy? Do you really even know what it covers? And of course, like we mentioned before, if things in your life have changed, what you would like to have covered may have changed. So make sure that you're taking a look at it. And again, in this example, I was really talking about more homeowners insurance, but that's really a good idea for any insurance that you have, especially if you've made one of those big life changes and you're making a list of all the things that you need to do with those changes. Not trying to add anything to your list, but add it to your list. Make sure that insurance is one of those things that you look at. And now my bonus tip is to automate your savings and your investments. Because let's be honest, consistency is really a key point in reaching your financial goals. I mean, how often do you forget about something? Or something else just comes up. So it just sort of goes out of your mind. And that's true for your finances as well. You mean to get to it, but it just kind of never happens. And before you know it, you're months down the road. And truthfully, you may have missed opportunities. When you didn't go talk to HR about the matching for your 401k, that's money that you left on the table. When you forgot to go talk to HR about putting a direct draft into your savings account, that's money that never got put in there. So, 6 months ago, 7 months ago, at the beginning of the year, had you done that and you were putting $20 in your savings account every month 6 months ago, you'd have $120 now. And I realize that that's not a huge amount of money, but $120, I mean, that's more than you had before. And if you think about compounding that, you're leaving money on the table, right? So how can you help with that? Well, like we said, you could consider automating your savings and investment contributions. You can set up automatic transfers from your checking to your savings account. You can do that yourself. I have a couple of those set up, and I did it in the app and just told it I wanted to recur, every month. I want this amount to go into my savings account. You can also do this with retirement accounts. And again, just like I said before, going to your HR department saying, hey, I want to change my retirement contribution. Or I want you to do, when you do my direct deposit, I want you to put a certain amount in this savings account and then put the rest in my checking account. They can do that for you, and it just automatically happens. And you know how that's really helpful? It will actually kind of minimize that temptation to spend the money instead. It's going to ensure that your financial priorities are handled and that they're handled regularly. And the truth is, you won't have to then give it that constant attention. You sort of set it and forget it. You know what? You don't have to think about it, but you're not really missing that money because it never came into your checking account. So you're probably not really thinking about it. And it just kind of goes into that account that you chose, and it's just done. So automating your finances, it can actually lead to much more disciplined savings and investing. And that, of course, is going to help you achieve those long-term financial objectives that you've set much more efficiently. So when you set it and forget it, just don't completely forget about it though, right? Just like we're doing now, on occasion, you want to revisit that and just make sure that what you're doing is still in line with your goals. Perhaps you've been putting a little too much into that savings account, or you've reached that goal and now you have a different one. So you want to adjust your automated amount, or you're making a little more, things are going well, and you're going to put more into that savings account. So just make sure that you actually revisit it at times. Don't completely forget it. Well, that's all I have for today. And I really hope, though, that this has been helpful and that you can take this information and it will help you to adjust your financial plan. And really doing this regularly, assessing your financial situation, it really is key to staying on track and just, ensuring that your secure financial future is in hand. And also, as you make these adjustments, make sure your goals for the remainder of the year are realistic, okay? And that you have a solid plan to reach them. We've got to be realistic with ourselves. If we don't, we tend to get disappointed and we tend to quit. So make sure it's realistic. Even the smallest amounts can really make a big difference. So whether that's increasing your savings, reducing your expenses, or maybe investing in some new opportunities. Take a look at all those things. And one more reminder, and I know I say this all the time too, but I want to make sure you guys hear it. We have certified financial counselors that are on staff at both branches of First Pioneers, and we are more than happy to sit down with you and, visit your current finances, maybe offer some suggestions that might help you find that financial success. That wraps up another episode of Money Tips No One Told You. We hope you enjoyed the insights and tips shared today. If you have any questions, thoughts, or topics you'd like us to cover in future episodes, feel free to reach out. If you found value in today's episode, don't forget to subscribe, rate, and leave a review. Your feedback helps us tailor future content to better serve you. There are several ways you can find us if you need further information or need to speak with a financial counselor. Visit us in person in Lafayette or New Iberia, Louisiana, or at firstpioneers.com to find out how to become a member of our family and find other financial information. Also, be sure and check out the show notes for important links and important information. Your financial journey is important to us, and we're here to support you every step of the way. We hope you have a great day, and we'll see you next time.